Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 27th of July, 2022. Alright everyone, let's get into it. So the first thing I wanted to talk about was this tweet that I put out today that, I don't know if it was controversial, but there were some people that disagree with me on this, and I'd love to just kind of go through this with you guys and see what you think about it. So I said in this tweet, I think there's really only two ways that a coin/token will be able to accrue long-term value. The first way is becoming a money/store of value. Second one is becoming equity-like, such as sharing protocol revenue with token holders. And then I said that assets that do both will become the most valuable. Now, in the first kind of a category here, I gave examples of ETH and BTC. I don't think there's any other assets in crypto that are a money or a store of value, or something like a commodity, right? There are kind of like assets that have commodity-like properties, but definitely not on the level of something like an ETH or BTC, which are definitely money and definitely a store of value, right? And I think the most obvious kind of evidence of this, to me at least, is the fact that both ETH and BTC trade at many multiples of their price to sales kind of like ratio. BTC in particular trades at like over 2,800, I think, on price to sales ratio. So it's obviously not valued based on the revenue that the Bitcoin network is generating. Otherwise, it wouldn't be valued as highly as it is. And same is true to ETH for an extent. I think ETH's price to sales is 140x, which is not anywhere near as kind of like high as Bitcoin's. But I think it's just like one piece of evidence that we can point to. But obviously, ETH is used as money a lot more than Bitcoin is within the Ethereum economy, at least, probably not outside of it that much. But yeah, there's no doubt that both of these are money/store of values. I think that's pretty clear. And the second category pretty much applies to basically everything else. So these equity-like tokens that share protocol revenue with token holders, we don't see many of them, obviously because of regulations and laws and things like that, and project kind of like teams being scared to turn on the fee switch, so to speak. Like, obviously the perfect example here is Uni, where the Uniswap protocol keeps growing, keeps generating record revenues, but Uni token holders are seeing none of that because because of kind of like regulatory concerns, and there hasn't been a vote to kind of like turn on that fee switch yet. And there are some protocols out there that do have kind of a fee take, but they don't generate that much fee revenue for the token holders, and thus they're not valued as highly as as people would like them to be. But obviously there is also going to be a notion of kind of like growth potential baked into these prices, and obviously crypto assets are kind of like pretty much correlated in general. So if like BTC and ETH are going down, the rest of them are probably going to be going down more. So there are other factors here, but I'm talking about long-term value accrue, and I mean like many, many years sort of thing. So if you look at all the assets that have done really well over the long term, there isn't that many of them. It's really ETH, BTC, and a few assets out there. But if you measure these assets against USD from maybe their kind of like bottoms of when they were trading. I mean, it does depend where you measure it from, but if you measure it from the bottom of the kind of like range, or you maybe take like a 6 to 12 month kind of like weighted average of their price over that time and see where they are today, well, a lot of them haven't really performed against ETH or BTC. I mean, pretty much all of them wouldn't perform very well against ETH and BTC. Maybe they performed well against USD, but I think that it can be discounted a bit because of the fact that whenever BTC and ETH go up, it kind of raises the rest of the ecosystem value up as well. So it's kind of difficult to measure those sorts of things these days, still because of the fact that the crypto market is so inefficient and is so correlated with each other. But I think it's still a good way to look at things. Now, obviously, there are other kind of like ways to drive value to tokens. People mention staking as one. I think staking for the sake of staking is not going to drive value, and staking just to get inflationary rewards is not going to drive much value, because if the inflationary rewards are too high, that's going to put downward pressure on the price, right? Yes, you'll probably get a lot of kind of like tokens locked up and a lot of people staking, but it's going to put downward pressure on the price because these people are obviously going to want to realize that kind of like that stake reward, and they have bills to pay and kind of like taxes to pay and things like that. Same is true for Ethereum. Though, I'm not trying to say that kind of like Ethereum is different here, but there are some protocols out there that have like 15, 20, 25% kind of like staking yields, right? That's just insane, because you can clearly kind of map that to the inflation of the token, and then you can take into account any other tokens that are coming to market from maybe insiders, VCs, team, liquidity mining programs, outside of that, ecosystem, reward programs, all that sorts of stuff. So those are definitely things to consider there when talking about staking. But usually when you stake, you get a reward in obviously the kind of like inflation of the network token, but you also get like the fee revenue. So it's the same thing. It's like, yeah, you're getting the share of the fee revenue, but you're just kind of like locking up your token to get it. It's not enough to hold the token in your wallet. You don't get that. You have to kind of lock it up to get it. Whereas there are other schemes like obviously EIP1559 and Ethereum where ETH is burnt that acts as a pseudo dividend. And that's why I said assets that do both of these things, become a money, store of value, and become more equity-like are going to be the most valuable. And that's ETH, really, at the end of the day. ETH does all of it. Like ETH is an amazing asset, and I've been through these before on the refill, so I won't rehash it again. But most of the tokens aren't equity like at all. They may have those kind of like governance properties that equity has, but it's really a meme. Like at the end of the day, because no one really values these things based on their governance rights. Maybe long term they will for the really successful protocols. It'll make more sense, but these days it really doesn't. So long-term value accrual is I think just going to be bucketed into these two things. And there are other things out there that people have tried, such as the algorithmic stablecoin thing, where you basically have like this Ponzi-esque mechanism that we saw in Terra, where the better the stablecoin does, the better the kind of like token does, and it feeds off of each other, right? You have like UST and Luna feeding off of each other. Then you have some other things like protocol-owned liquidity, which is basically like a kind of a share buyback, so to speak. I mean, it is using it for productive purposes, so it's buying kind of like the tokens and then providing liquidity for it, or buying kind of like the LP shares, which is buying obviously half the tokens, half something else, and things like that. But again, it's very similar to just kind of like I guess sharing protocol revenue, just in a roundabout way. So I think if you want to look at it from the highest level, it's basically these two things: a commodity and a security, if you want to talk about them in the traditional sense. Obviously, no tokens want to be classified as a security, which is kind of bizarre to me. I think long-term, most of these tokens being classified as a security is actually a positive. I do think securities laws need to be updated for crypto assets, but I don't think them being labeled a security is a death sentence, because think about it. Some of the largest, or most of the largest assets in kind of like in the traditional finance ecosystem are securities. I mean, go look at the stock market. It's all securities, right? And we have some trillion-dollar companies in there, such as Apple. So something being labeled a security is not a death sentence for it. It could actually end up being a boon for it. But I think for that to happen, there needs to be securities laws updated to reflect kind of like the intricacies of crypto assets, and the exchanges would also need to be registered to trade securities. Obviously, a lot of the exchanges aren't registered to do that, and there is a lot of red tape around that. So that, I guess, is why they don't want to be registered as securities. But there are decentralized exchange alternatives too, and there are kind of like different ways to trade these things, depending on what you want to do. But yeah, I kind of like get it there. Whereas a commodity, right, is a totally different thing. And I think it's funny because ETH has the properties of both a commodity and a security, if you're looking at it from a kind of like traditional point of view. But I don't think ETH is a security at all. And obviously BTC isn't a security, but I think BTC definitely on the money SOV side, and much less on the equity-like side, because BTC holders don't have a share of anything in the network, really, because there's no proof of stake, and there's also no kind of like fee burn. But on top of that as well, you also have the fact that SOV and moneyness of an asset, it's not so much based on fundamental drivers as it is based on belief. As I said, like BTC being viewed as a money slash store of value means that it is trading at such a huge multiple of its kind of like network revenue, which means that's belief. Like people believe that Bitcoin is a good store of value, is a good money. They want to buy it. They think it's going to be worth more in the future. Obviously, there's an element of belief to pretty much all assets, but I think it's much more pronounced for a money slash SOV, because at the end of the day, we all know it. Even the money that is issued by governments, even fiat, it's all a faith-based system at the end of the day. It is not really kind of like, if we value something, like if I value this kind of like fiat and you value this kind of fiat and you'll accept it, well, it's kind of like exchange for goods and services like that, right? And I think store of value is even bigger. I mean, the reason why gold is worth so much and is considered a store of value is because we made it that way. Like it's kind of like use within the industry, and just industrial use would make its market cap much lower than what it is. So I think, as much as I think it's a meme, BTC and gold are pretty similar in that sense. But I think ETH transcends that, because ETH has all of those properties, but as well, also they have the equity-like. Also it has the equity-like properties too. So when you put all that together, that's why I think that assets that do both of these things will become the most valuable. And obviously, I'm very, very bullish on ETH, so that's kind of like my thinking around this. Maybe you agree with me, maybe you don't. I'd love to get your thoughts on this in the YouTube comments below or in the Discord channel. Let me know if you think that I'm stupid for thinking this, or if you think it's accurate. I'd love to hear from you. All right, on to the next update, if my mouse wants to work. So onto an update from Optimism today. So they've launched a new onboarding flow designed to introduce Optimism to new users in an accessible way regardless of their previous experience with crypto. After completion, you'll be able to claim an NFT with art reflecting your interests. This is really, really cool, guys. Like, I think Optimism has outdone themselves here. You can actually see the first page here of kind of getting started with Optimism, and they have three things to kind of like I guess like three categories here where, you know, you can select you're starting your journey, so you're completely new to crypto, or that you've used centralized exchanges, or that you've used other blockchains. And there'll be different steps depending on what you select here. So if you're selecting I'm just starting my journey, they'll walk you through how to download a wallet, how to add Optimism to that wallet, or the Optimism network to that wallet, how to deposit ETH into the wallet, and get your free Optimism NFT. I think this is really cool. It's something that's obviously pretty simple and something that doesn't probably apply to most of us, or if not all of us on the Refuel. But I think it's just really cool that Optimism is doing this because, as I've said plenty of times, guys, like it's all well and good to build all this cool technology, but we need to make it easier for people to be onboarded. And it's great that Optimism is taking the initiative here. They didn't have to do this. They could just leave this up to the application layer, but they're taking it seriously. And this is really good for adoption of Optimism in general as well. So I really, really like this. And the NFTs are really cool that they've kind of got here as well. And you can kind of use it with Rainbow Wallet, which I'm actually going to talk about in a sec. Not in a sec, a little bit later in the Refuel here. But yeah, I mean, you can get the kind of like, I guess, full details here in the Get Started section on the blog. But then if you want to see this in action, you can basically go to the website which is app.optimism.io/get-started, and you can see the different options here. Well, okay, mine's not in dark mode. I'm going to put a dark mode on. There we go. So you can go, I'm starting my journey, and then I've used centralized exchanges, download the wallet, all that sort of stuff. I've used other blockchains, and then you just have to basically add the Optimism network. So it basically tailors it to kind of like what skill level or what, I guess, like familiarity you are with crypto, which I think is very, very, very cool. So kudos to Optimism for doing this. I'm excited to see what else they've got cooking up on the onboarding front as well. All right, so speaking of upgrading the onboarding process, Arbitrum has upgraded their bridge page. Now, this page has been notoriously kind of like called out as not being user-friendly. Well, they've updated that. They now have kind of like the Arbitrum bridge here, and it's saying that I'm on the wrong network. I think it's because I'm on Polygon right now. Let me just change that to Ethereum mainnet. There we go. So when you kind of like have selected the Ethereum mainnet, you'll get like the nice bridge interface here, where you can select how much ETH that you want to bridge into Arbitrum 1. Now, I have my Sassal.eth address loaded up here. So if I was to enter kind of like 1 ETH, and then it'll show me kind of on Arbitrum 1 what I'll be able to get, and it'll give you all the details here. So you're moving 1 ETH, you'll pay this much in gas fees. Pretty cheap right now, guys. If you're thinking about bridging into layer 2, it's probably a good time to do that. And it'll break down like what the L1 gas cost is and what the L2 gas cost is. Obviously, bridging into an L2 doesn't cost anything on the L2, but it does on the L1. And you can kind of like click move funds to Arbitrum, and that's basically it. Like very, very easy onboarding process, which I really, really love to see. And then there'll be a status page after you've gone through it, as you can see on the GIF here, that basically says, probably about 10 minutes till your funds are onboarded into Arbitrum 1. So very, very cool to see this. I think, obviously, as I was saying about the Optimism thing, the more ways and the easier ways we make it for people to be onboarded into these layer 2s, the better. Obviously, the easiest way for people and the cheapest way is probably always going to be centralized exchanges. But for people who don't want to do that, for people who have existing assets on Ethereum layer 1, we need to make that as easy as possible as well. And people obviously want to go back and forth between layer 1 and layer 2. I do think that layer 1 is still going to persist for a while. There are a lot of people that are fine paying the fees, even if the fees go up to like $50 a swap or something again. I think people are fine paying that because usually when they go up that high, it's a bull market and it's kind of like worth it for them. So I do think layer 1 is going to persist for quite a while. It has such a huge network effect, and making it easy for people to kind of like bridge in and out of it for those who want to do that with layer 2s is going to be very important, because layer 2s, just because they have cheaper fees, doesn't mean they only appeal to people who can't afford the layer 1 fees. They also appeal to anyone who wants to use applications on there, wants to make money on there, wants to get value out of the products and services on there. So having a good bridging experience in and out is very, very important, I think. All right, so speaking of kind of like bridging, there's kind of a tweet here from Togrel, who is a senior researcher at Scroll, about Hot Protocol enabling support from Scroll Layer 1 to Scroll Layer 2, which is really, really cool to kind of like see here. So if you're wondering why it's called Scroll Layer 1, Togrel kind of mentions this in the replies. It's saying it's running on a private fork of Ethereum for now, hence why the naming. So it seems like Scroll is kind of making moves here. I mentioned them a couple of weeks ago about how they have their zkVM kind of like alpha testnet, I believe. Or pre-alpha testnet kind of out there right now, but they're making moves, definitely. They are going to be, I think, a big player in the ZK ecosystem. It's funny because I always see people mentioning, obviously, Polygon, ZK Sync, and Starkware in the ZK race, but don't sleep on Scroll, guys. Like, they really are some of the smartest people in the ecosystem. They've just been under the radar and mostly in stealth, or I guess like in pseudo stealth for a little while now. So definitely check them out if you haven't yet. Checked out the technology that they've got. I think, you know, there maybe, it's kind of hard to say like which networks are going to be live on mainnet in a capacity that devs and users can kind of like get value out of on the zkVM front. They're all in a race right now. We saw them all kind of like announce their zkVMs at the same time in the same week, and there was a big discussion last week about that. But it's going to be an interesting thing to see, like, what the race is like. Because obviously, I said to you guys, the race isn't just a kind of like a short-term thing. It's a long-term thing. So even if, for example, Polygon and ZK Sync launch before Scroll, it doesn't really mean anything. I think what means the most, as I've said lots of times on the Refuel, is kind of like the marketing, the business development, the onboarding users, the supporting infrastructure, all that sorts of stuff. And developers, obviously, is a big kind of like thing there as well. So love to see kind of when this stuff goes live, but very cool to see that Scroll is kind of like working on their bridging. And I think this is Hop Protocol's interface. So I don't know if this is Hop Protocol kind of like helping them with it, or they forked Hop and did something and did this to kind of, I guess, like test out some things on their back end, but we'll have to see kind of like what happens there. But it's cool to see a little teaser here from Scroll today. All right, so Polygon has published their Q2 stats of the Polygon POS chain, and it actually grew in the second quarter. So you can see here that the POS chain is now home to 5.34 million unique addresses, a 12% increase from Q1. Total Q2 transactions increased 4% to 284 million, and network revenue was 5.56 million. Average cost per transaction fell 49% to about 2 cents here, and then they go into more detail about this. Very, very cool to see this. I know the Polygon POS chain is kind of like the divisive thing amongst people, but guys, like, take it from me, I do think when Polygon has their mature zkVM out, they're going to convert the POS chain to a zkVM. It makes too much sense for them to do it, and I think they really, really want to do it. The POS chain inherently has limits. It is kind of like a patchwork. It's good, it works, it's fine, but it is a patchwork kind of solution. It is one of those kind of like bridging short-term solutions until we had more mature kind of like zkVMs and stuff like that out there. So when I'm seeing these stats, I think it's really cool, because if Polygon, which I think they can do this, but if they can basically get to a point where they're like, okay, well, we're ready to basically turn the POS chain into a zkVM, and we're going to be able to do it without erasing any history, without kind of like interrupting the user flow, without interrupting anything, sort of like how the merge is being done for Ethereum. If they can do that, that is insane, because that basically means that the POS chain goes from being a kind of like more or less a standalone chain, right, to a full layer 2 zkVM on Ethereum with all of the network effect that it has accrued as the POS chain. So this is what I've been talking about in the past, about how these layer ones, these other networks, these side chains could, or these standalone networks could, in theory, kind of like change over to a rollup, or whether it be a zkVM or an optimistic rollup or something like that. And in doing so, they bring all of their network effect. They bring all of their kind of like users and developers and all the activity and all the apps and everything with them, which can't be said for new ecosystems that are spun up. New ecosystems are fine. I have nothing wrong with that. I'm very bullish on those too, because they can very quickly be spun up these days. But in kind of like in the meantime, these other networks can kind of like gain ecosystem kind of like traction, gain network effect, and then be converted into a layer 2, into a rollup, which I think is incredibly bullish. So good to see the Polygon POS chain growing. I'm definitely eager for the day that the POS chain gets converted to a zkVM. Probably won't happen anytime soon, just because obviously they'd probably want to release the zkVM first on mainnet, then let it bake for a while and see kind of like how it plays out, and then convert the POS chain over eventually here. All right, so I mentioned Rainbow before, which is the mobile wallet app that I've talked about on the Refuel plenty of times now. So they announced today that they now support NFTs on mainnet, so Ethereum mainnet, the Polygon POS chain, Arbitrum, and Optimism. So you can see here the interface of kind of like seeing your NFT collectibles inside Rainbow Wallet. I think they've teased this for a little while now, and I think I've covered the teaser, but very, very cool to kind of like see this supported here. And as I said before, Optimism, it kind of like showcased this here. You can on their kind of like their own NFT in the Rainbow wallet, which is very cool to see. But if you are a Rainbow wallet user, you can now basically view your NFTs there if you're an NFT collector as well. Even if you aren't an NFT collector, like I don't consider myself an NFT collector, but I have a lot of NFTs on Sassal.eth, which I really kind of like treasure. And I think are really cool, especially things like the EIP1559 NFT, obviously, and the Daily Gwei Anniversary NFT. So being able to kind of like just see them at a glance in a wallet like Rainbow is very, very cool. Obviously, Zappa released their V2 last week, which just has a heavy focus on NFTs as well. So I look at them in there. But I think, this is the magic of Ethereum. We don't just see our kind of like ETH and tokens. We see our DeFi positions. We see our NFTs. We see DAO-related things like, governance forums and stuff like that, and voting and all those sorts of things. And we see Web3 related stuff too with Lens Protocol. Like your Ethereum wallet is not just a place to store your ETH and tokens. It really is a passport into the entire Ethereum network, which is obviously much more than kind of like just kind of holding tokens, right? Holding ETH, like, which is obviously the bull case for Ethereum, right? And something that we all get excited about. But very cool to see Rainbow supporting NFTs here. Definitely check it out if you're a Rainbow user. All right, so Mirror has introduced Web3 subscriptions today. So what Web3 subscriptions are is basically a way for people to subscribe to any Mirror publication with their wallets. And then you can receive an email when new content is posted. So they go on to say, Mirror has always been a place for Web3 creators to publish and make announcements, but until now, there hasn't been an easy way for communities to stay engaged through notifications. Mirror takes subscriptions a step further by centering them around a Web3 wallet rather than an email address. Web3 subscriptions open the door to building a wallet-based community that can be used across Web3. As I was just saying about how an Ethereum wallet is more than just something to hold tokens in, this also falls into it, where you can subscribe to people's kind of like publications using your wallet and then have an email address attached to it and then get the kind of like updates sent to your email. I believe this is also privacy preserving as well, which is very, very cool. So there's also a bunch of other things like identity-related stuff that fall into this, but this is awesome. It's something that I've been waiting for quite a while because I want to start kind of like publishing the Daily Gwei on Mirror as well as Substack, because I currently publish the newsletter on just Substack because they had a way for people to subscribe to it, whereas Mirror didn't. Well, now Mirror does. So I can basically do kind of posting on Mirror and on Substack, which will just broaden the reach of the newsletter, and maybe one day just kind of like move away from Substack altogether and just use Mirror. So very, very cool to see this. If you're a content creator, whether it be kind of like writing blog posts or you create content for a project that you're working on or anything like that, you should definitely check out Web3 subscriptions. I think it's very, very cool, and I think it's a very unique use case of Web3 and something that it's uniquely enabled by having an Ethereum wallet. Like people always say, oh, Web3, whatever, like there's no real use cases, doesn't really have a advantage over the current Web2 ecosystem. Well, I think this is one of the big advantages. Being able to basically kind of like subscribe to publications with your wallet, and then in these publications there are also embedded things like NFTs that you can just do from the one tool, which I think is very, very cool. So definitely check out this announcement for further details here. I'll link it in the YouTube description below. All right, to finish up today's episode, I wanted to talk about a thread here from Vance Spencer, where he basically said, WebAssembly is the future. It's written in JavaScript. It's written in Rust. Subnets are the future. It's written in Move. Scaling via hardware, Libra, data availability. It's a settlement layer. It's modular. It's written in Move. It's monolithic, parachains, app chains. And basically what he's poking fun at here is all the buzzwords that people in crypto talk about all the time. And he continues this thread and basically has a couple of tweets here, which I really liked, where he says, what I actually care about is if you aren't Ethereum, how good is your business development team, right? So really, at the end of the day, this is exactly what I've been saying for so long. Like all these buzzwords, all this stuff, it doesn't matter. Like no one outside of the crypto natives, which is a very, 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 very small percentage of the population, cares about this sort of stuff. It's good to care about the tech and build the best tech, but at the end of the day, the best tech is not what wins. Right? What wins is, as Vance said, the things with the best business development and marketing, because Ethereum, the network, is objectively not the best tech. There is kind of like much better tech out there at the end of the day. But Ethereum has all the network effects. Ethereum has a bustling layer 2 ecosystem that is handling all the business development and marketing on that front. Ethereum has a really, really strong community that does a lot of marketing as well. So, there's all those kind of like things that play into it. And these other things that we all talk about, like settlement layer, data availability, rollups, all that sorts of stuff, that's for the crypto crowd. That is not for the mainstream. And at the end of the day, even within the in-crypto crowd, none of this shit really matters. Like, I remember last year, people were kind of like shilling Solana, being like, oh my God, Solana has Rust support. So people can write their smart contracts in Rust. It's so much better than Solidity on Ethereum. It's amazing, blah, blah, blah. Now I don't really hear that anymore. And now I'm starting to hear people go on about this move language that was created by Facebook's DM project and this kind of like these new networks like Aptos and Sui. And it's the same kind of like thing as last year. It's just a different network and a different language. People saying, oh my God, Move's amazing. It's better than Solidity. It's, Aptos is better than Ethereum, blah, blah, blah. It's time and time again. This is, obviously, it's not just Solana and Aptos. It's so many of these other kind of like networks out there. Like, at the end of the day, most of these networks, most of these other layer ones are completely useless. There are certain ones that are literally just being made to extract money out of the ecosystem. A lot of the VCs that get involved with them are seriously just trying to extract value out of them. They don't actually care about anything except making money and kind of like pushing a narrative. They probably know deep down that these networks aren't going to have any long-term sustainability, but they do it anyway because there's money to be made. There's a lot of money to be made. I mean, look at Layer 1 season, the second half of last year. Anyone that exited that, anywhere near the top and that was kind of like got in early as a VC or something, made a lot of money from that. And there were a few VCs and funds, especially that kind of like exited around there and made a lot of money, potentially billions of dollars, which is just crazy to think about because all of that money came from speculators and retail investors. And at the end of the day, these ecosystems seem to be getting abandoned. At least most of them are, which is, again, as I said, like just extractive and crazy. But I think just Vance put it really well here. At the end of the day, everyone talks about these kind of like tech things. Everyone tries to pump up an ecosystem by talking about them, but it's not about that. I think he's right in saying it's mostly about business development and marketing, but I also think it's about having a strong, long-term oriented social layer, a strong community that obviously creates that social layer. And I spoke about this yesterday or the day before about social decentralization. And our Ethereum obviously is very strong. I think Bitcoin has a strength there too. There's not really any other networks that I can point to that have that. And you can see that reflected in both the ecosystem and in the market price. And when you think about it like that, I think it's very easy to see why a lot of the people that have been in this ecosystem for a while just scoff at all of these sorts of things. They scoff at new networks because we've been here before. We've seen this play out before. We're tired of it. Like, honestly, guys, I'm so tired of new layer ones. Like, we don't need them. I'm not just saying this because I think Ethereum has already won. I'm saying this because there's been so many attempts at this in the past. And, there's very, very few, if any other layer ones besides Ethereum and Bitcoin that actually look like they're going to have long-term value. Like, could you point to anything except Ethereum and Bitcoin and say that you're confident that it's going to be relevant in 10 years? It'll probably still be around in some fashion, but could you say that it's going to be relevant in 10 years? I can't point to anything else. Even in some of the most hyped up things today, I can't confidently point to them and say, I think this thing is going to be relevant in 10 years. As I said, I think they'll be around because there's still money to be made, but relevancy, I don't think so. And, if you go out more than 10 years, right, you can kind of like start to see that even if like it just depends. Like Ethereum and Bitcoin are relevant today, but in 10 years, like we'll see what happens. Like obviously I believe that Ethereum and Bitcoin, and I have full kind of like confidence that they'll be around, but some people don't. So look, 10 years is a lifetime in crypto. 10 years ago in crypto was 2012, guys. Like even before the first big bubble of Bitcoin in 2013 with the whole Silk Road thing. 2012 was literally, I think, people just buying BTC to use it on Silk Road, really. So and a lot has changed since then, right? I mean, the whole ecosystem has changed completely. I mean, if someone from 2012 time traveled to 2022, they wouldn't even know what to think of today's crypto ecosystem. So imagine what crypto is going to be like in 2032. Like, it's impossible. There is no way to predict it. But I have confidence, and I personally believe that in 10 years, Ethereum and Bitcoin will still be relevant, but very relevant, probably more relevant than ever. But I don't, and I can't say the same thing for anything else out there. And that's just my view on things. I think we're going to have to see how it all plays out. Maybe I'll kind of like think back to this refuel in 10 years and be like, oh, well, let's see what's relevant. Maybe Ethereum's not relevant. I don't know. No, I don't think that. Maybe I think it's definitely going to be relevant, but it's kind of like funny when you think about it from that perspective and you kind of like take the decade view instead of maybe the week to week or month to month or even maybe year to year view. Once you start looking out much longer term, like 10 plus years, you start to see some different kind of like patterns emerge there. But yeah, anyway, I think that's going to be it for today's episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.